Good morning, everybody. It's the 5th of August. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning.
We're on the opposite sides today.
I know, I was actually looked at the screen and thought, feels
Doesn't
a bit
look
odd.
right. Yeah, I'm quite happy over
Maybe
here.
we're on
So,
the sort of like opposite sides because I did so well in the gun to head challenge yesterday
y-
and I've been promoted from
yeah, that's
second
quite
place to
possible.
first
We're like
place.
an old married couple, aren't we? Sleeping on our own sides of the bed.
Yeah. You need to have a little change about every now and then.
Keep it fresh.
Yeah.
Okay. So, Bank of England today, monetary policy decision due at noon. Obviously, there'll be chat about what's going on with the bond buying program as well, and whether or not there'll be any tapering on the cards. So, we may be moving a step closer to tightening on monetary policy. We need to unwind this £900 billion government bond purchases. While also keeping open the possibility that borrowing costs could also be pushed below zero. There are some possibilities of negative interest rates, which may allow the Bank of England to act before rates rise to that level. Um, so the bank has suggested the rates may need to move to 1.5% before they sell bonds. That's according to the reports that we have today. Also, we've got the next round of loosening on travel restrictions and entry requirements to allow fully vaccinated arrivals from France to skip quarantine. Also, India, UAE, Qatar, and Bahrain join France on the amber list. The effects of that come in on Sunday at 4 a.m. So that'll be good news for people who like to holiday in France. In terms of the corporate side of things, Uber posted wider than expected losses for the second quarter in a row after spending heavily to try and lure back drivers. So this is raising fresh doubts about the reliability of its labour model in the long term. So where Uber sort of come in and stole the show for a number of years in terms of the taxi business, there are concerns whether or not they can maintain that over the longer term. Later today, we have quite a number of earnings due out. Already this morning, we've had Adidas, Continental, Bayer, Lufthansa, Merck, Mondi, Novo Nordisk, Rolls-Royce, Siemens, and WPP. We've also had Nintendo report Q1 results in Japan. So plenty going on the corporate front. And of course, then we have at 12 o'clock today the BOE rate decision. So there was a bit of volatility yesterday, which was helpful for us traders. We had some decent returns on our guns to the head trades as well, which we'll come on to in a bit. But Steve, the volatility that we saw yesterday in the markets, how did that impact the charts and the markets that you've been looking at?
If I hop on to oil, it's obviously that was my gun to head trade yesterday, and
Stop going
but
on about it.
but it's been a while. Yeah, but it also sort of plays into the longer term outlook as well, because we've been talking about this. Is this the end of the impulsive fifth wave move higher, and we're going to get a correction now? And it looks like it's shaping up for that. We really need to get a break of $65 in oil. Currently trading 67, 65. That's WTI West Texas Intermediate. So a break below there, and that will complete the correction, allowing it in a few weeks to sort of like maybe go again. So looking quite shaping up quite nicely. Obviously, we had this sell off from the 73.85 level, and we've had some quite aggressive high volume sell offs, as you can see, and the next support down around about the $65 level. On the oil, had a bit of a reversal again. This 1832 to 1835 area holding quite nicely. On the 4-hour chart, we've got a bearish, almost a bearish outside candle, which is pretty negative, but it's held on above 1805. Really need to sort of see a break of 1805 to open up an attack on the 1790. 1790 is, for me, a bit of a line in the sand. I'm bullish above it, bearish below it. 1790, a break of there would target the 1750 area, and then on to 1680, as we can see from back in early March. Let's have a look at cryptos. What did Bitcoin do? We've got this break through the support, the resistance at 40,900, and it broke the 41,340, which was the high back in June. But it reversed very sharply, and although we did get a positive day yesterday, so that was lucky because that was my other option, either sell oil or sell Bitcoin. We've had a negative overnight price action, so pressure seems to be piling back on again. We can see from the 4-hour chart the cloud held support, a nice reaction back higher, but again it stalled at just in front of the 40,000 level, and we've had 3 negative 4-hour candles, volume dropping off, but that sort of shapes up to be a bit of a head and shoulders formation. I would say if we get a break of the neckline, which comes in maybe now around about 37,600, I'd prefer to see a break of the swing low, which is 37,480. And then we can target the 36,360. So I remain negative on this while we're below the 41,000 resistance area. Indices were all over the shop yesterday. We had a little bit of mixed bag in the US, and in the UK, we've sort of held it at the resistance. 4-hour charts held around about the 71.40 area. Overnight, or in the last hour or so, we've had a bit of a pullback, dip lower down to just around about the 7100 psychological level, and again that's a little bit of a pivotal level. A break below 7100 or 7095 should open up the downside, but there is plenty of support lower. Otherwise we look to be targeting again the 7140 area. DAX has pushed higher, and we're at the highest levels since 15th July, so for about 2 or 3 weeks. Next area of resistance, 15,800, and it looks like we've got off to a nice start this morning. As you can see from the hourly chart, this bullish engulfing candle is looking pretty nice. It looks potential for it to kick on. The Dow hasn't performed quite as well. We saw the sell-off yesterday and formed a base around about 34,775, in front of the 34,715, a little bit of a bigger support level, which is a 30-minute chart. It looks a bit odd looking at that, but you can see the supportive area of the cloud, and obviously the cloud is the supportive area is based on previous price action, and it's projected forward. Yes, so that still looks like it's holding on to the bullish thread. S&P's still hanging around this 4,400 level. We are sort of forming a little bit of a lower highs here, so could sort of like call that a bit of a descending triangle formation. A break to the upside would take out the all-time highs and push on. So if you're a bear, look to fade it in front of there with a tight stop above. But if you're of the bullish ilk, wait to see a break of the highs and add to longs, maintain your longs, whatever you fancy doing. Aussie 200 still looking pretty good, with the commodity bases. The commodities still sort of like holding on to their gains, although obviously we've seen oil reverse ever so slightly, but it's more the miners, the gold, holding on to those levels. China 50 still under a lot of pressure, and we've got a bit of a higher lows, so a nice little wedge type triangle formation to look to break, and we've got Ichimoku cloud offering resistance here as well. Hang Seng, similar sort of price action to the China 50. No real indication at the moment, sort of sitting mid-range waiting for the next move. I think China 50, we sort of we hit our we look to sell that overnight, and that's sort of like played out quite nicely. There's quite a bit of spiking going on around about the 3 o'clock time. Nikkei still under a lot of pressure. Again, we're sort of triangle formations, sort of like major downward trending resistance coming in above, but really struggling to get past the cloud at the moment. That covers it, I think, Joe.
Nicely done, Steve. Okay, FX. So as I mentioned, a little bit of volatility yesterday, mainly caused by what we saw in the US dollar. So yesterday, we saw this little push to the upside. So again, this 38.2% Fibonacci level at 91.79 is doing a pretty decent job. So we engulfed all of the previous day's price action, although that was very indecisive. So we've actually formed a bullish outside candle there, having found support at this level. Bit of weakness today, so a little bit of a pullback, but I still think there's probably a case for being bullish on the dollar index, because I still feel over the sort of longer term we're in the process of forming this double bottom, and in order to complete that we need to get above 93.43. Obviously we saw this grind higher within a sort of wedge pattern. We broke out and then we did see a corrective move lower, down to this 38.2% level, which seems to have found some support. So again, I'll be looking really for a push to the upside on that. And obviously that's going to be determined by a lot of different factors. We had the Fed voting member Clarida yesterday raise questions over the potential 2022 hike on interest rates, and obviously continues to talk about tapering as well. So dollar index is going to be pretty hard to call, I think, but if you take a sort of longer term view of things, then I think we are in the process of bottoming out, and we may see higher prices. So my short-term view continues to be looking to buy dips on that. So have a look at Euro USD, because again, on the flip side of what I've just mentioned, I feel this is in the process of forming a top. It's taking its time. It's not as straightforward as we'd all like it to be as technicians, but it did look as though it was coming close to breaking this neckline when it moved down to the 117.51 level, which never actually broke. We did see a little bit of an ending wedge form on the daily chart, and as you can see, we saw this break up here, which stoked some buying or some exiting of some short positions. But yesterday, we saw a bit of a turnaround, an outside bearish candle compared to the day previous. We sort of made highs above the highs of the day previous and then closed below the lows of the day previous. So certainly appears to be some interest on the short side, and a potential for this to move down to test this all important 117.51 level on the downside. So looks as though it could be a case of selling into the strength that we have posted today, although it's only minor, up by 0.08%. Cable, this seems to be stalling just in front of a 61.8% fib level. So from the daily chart here, we pretty much confirmed the breaking of a double top. So first top here, second top here, broke the neckline here, but then obviously we rallied back quite strongly and corrected higher. And I imagine this would have thrown out a lot of people, because people would have been maybe shorting on the break of this level. But we rallied up to a 61.8% level at 139.91. Price seems to have stalled in front of that. We're chopping about a little bit here. Posted a negative day yesterday, backing up with a bit of strength today, but the volumes aren't really indicative of a continuation higher. So for me, again, it's a case of selling into strength here, potentially a larger top pattern actually taking shape here, which would obviously be supportive of US dollar, and expecting more weakness in sterling. Some of the Aussie markets rallied over the last couple of sessions, but Aussie CAD was one candidate that sort of rallied into this downtrend channel yesterday. I drew some resistance on here at 93.15, which it pretty much hit to the tick. So still fancy it to remain below that level. Aussie US dollar, another one where it sort of tried to push high yesterday above this resistance at 74.00, but failed and actually closed back below it. Trying to have another look at it again today, but I think that will probably fail as well. So I'd be looking to sell into strength on that one. This one has actually completed the head and shoulders top pattern. Did it really back here at the beginning of July, and for me, lower prices can be expected. Looking at New Zealand dollar, US dollar, that's is a bit choppier than what we've just seen on the Aussie side of things. Nothing particularly clear on there from a technical perspective, so probably best left alone for now. Looking at some of the other dollar markets, this is a bit of a mess as well, given that it's linked quite heavily to what's going on with oil. Yeah, I think that's pretty much it. Maybe an
Nice.
interesting pattern here on dollar Swiss. Posted a bullish outside candle around some sort of support line that I've got here at 90.53. So maybe an opportunity for bulls to onboard it here for a continuation higher. Cool. So let's get on to the real stuff that we're interested in talking about. Well, certainly Steve is anyway. The gun to the head trades from yesterday. We finally managed to bag ourselves a decent winner. You hit target on oil, 150 ticks. That was pretty much wrapped up by just after lunch, I think.
Easy. Lemon peasy, easy squeezy or something.
Yeah, something like that. So yeah, 3R, congratulations. I had a 38 tick win on New Zealand dollar US dollar for a 1.36R at win at 9 o'clock. So that was well needed, and has certainly clawed a bit back from the losses that we've seen over the last couple of weeks or so. So Steve, can we keep this? Can we turn this into a bit of a streak? What do you fancy today?
I'll tell you what I'm going to go for. I'm going to go for gold, and I'm going to going for gold, just like the Olympians and the Paralympians at the moment. So really looking at this, and what I'd like to sort of also mention is the Acuity, our parent company that provide the new sentiment analysis. A couple of market alerts that have appeared on gold over the last few days. One of them is an 80% confidence of a move higher. This was posted here, but the main thing I'm interested in is the 50% confidence one, which basically is, if you see the blue line, new sentiment is moving lower over this since the 7th of July. So new sentiment moving lower, but prices have pretty much held up really nicely and looked quite positive. However, if we sort of consider the more technical side of things, the formation I'm looking at the moment, especially after yesterday's price reaction, rejection of the 1830-34 level, is sort of building up to a potential break of this 1790 level, which I've been talking about. So I'm sort of considering the 50%. Obviously, you'd rather go for something with a bit more confidence, but I really like the sort of the way the sort of like news sentiment has dipped lower since this since this alert has come out. So it's saying gold price should fall 50% possibility over the next 2 days. In the last 10 occurrences, it's happened 50% of the time. So looking for maybe a move lower this morning. So stop with the waffling and I'll get on with it. And I'd prefer, obviously, to sell a break of 1790 or to sell it up at 1830, but there's a gun to my head in this challenge, so I can't do that. So let me put so I'm getting short at 1812.82. I'm going to have I was going to have a 10 point stop in it, and really, why don't I look for I mean, the 3-to-1 worked pretty well yesterday, but maybe I'll go, if I go for the 2-to-1, it's sort of like, I know there's going to be a bit of support here. So yeah, I'm going to go for 2-to-1 risk reward on this. I'm going to take profit in front of 1790, which is the key level for me. So if it does break, you know, I'd be more aggressive and go for the 1750 area. But if I don't know, maybe we'll wait till Friday to break that. I don't know. It just doesn't feel like it's got enough momentum in it today, and there's a little bit of two-way price action going on. So yeah, getting short here. Stop at 1822, spot 22, targeting 1792, spot 22.
Nice. Best of luck. I'm going to take a look at Euro Yen and looking at the daily chart first. It's broken out of this big channel that it had been trading in and now trading in what looks to be a corrective kind of wedge. I just feel that this isn't really finished. We saw a couple of days of weakness, but followed by a couple of days of strength. And I think if it is going to fail, it's going to happen pretty soon ahead of this 130.00 level. So I'm going to attempt to sell it now on the intraday charts. Also, what I quite like, there was a level here from the 29th of July that's just sort of hanging out all by itself and hasn't been untested. And if we look at the last hour, we tested it there and failed, and it looked to be rejected. So I'm going to sell it at 129.79. Now, if I was being super aggressive, I'd just go above the high of that. What I'm suggesting is the rejection candle that we posted between 8 and 9 a.m. But I'm going to try and be a bit safer and actually put this stop above the high of the candle here, which sort of triggered this downward moves, just to try and give myself an extra bit of breathing space. Target down here at 29.03, stop loss at 130.09. So just above that round number as well, looking for 2.5R on that one today. See how it goes. Okay, so numbers out today. Well, in the next 20 minutes, we've got UK construction PMI. That's expected to fall to 62.5. Then at 12 p.m, we have the all-important Bank of England rate decision. No change in policy is expected, but obviously we'll be listening for what they have to say in regards to things like inflation, tapering, and potential for interest rate rises going forward. And then at 1:30, we have the US trade balance. Plus initial jobless claims. Trade deficit is expected to narrow to 63 billion and initial claims expected to fall to 370k from 400k, and continuing claims forecast to fall to 3,150 down to 3,269. So keep an eye on your US dollar markets and indices around 1:30 today.
Coolio.
And I guess everybody will be looking forward to what happens tomorrow on the non-farm payroll numbers.
Oh, it's not, is it?
Yeah.
Yeah.
Cool. Right. I think that's it, Steve, from us. Unless you've got anything else to add.
No.
Lovely. Well, let's wrap it up there. Have a good day, everybody. And we'll be back on Non-Farm Friday.
Cheers.